In the absence of any major data releases domestically this week, the market's focus shifted towards the RBA's April board meeting minutes released on Tuesday. If investors were hoping for a clear indication of how concerned the RBA is by the recent strength of the Australian dollar in the minutes, they would have met the release with an element of disappointment, with little indication of the extent of its level of concern. We did, however, see in the minutes that the statement that an appreciating exchange rate could complicate progress in activity rebalancing towards the non-mining sectors of the economy. But this didn't provide any more guidance than what we saw out of the statement released 2 weeks ago. We also saw RBA Governor Glenn Stevens speak at a forum in New York entitled Observations on the Current Situation. The general theme of this speech was that the view that globally, monetary policy has reached its effective limit and that governments need to engage in greater fiscal action to boost economic growth further. Governor Stevens' statement that record low interest rates are a big problem for savers perhaps throws out the idea that the RBA is considering further cuts to interest rates based solely on the strong Aussie dollar. It was interesting that these comments were made in the context of an international focus, but equally can be interpreted that the RBA are keen on letting the upcoming federal budget next month do some of the heavy lifting required to keep economic activity at preferred levels. During the week, we saw the price of oil reach its highest level since early December last year, despite prices taking a hit last Monday, when a meeting of the world's largest oil producers in Qatar reached a stalemate about capping output. Since then, we have seen a report released showing US crude production levels falling, combined with Iraq saying that talks to freeze output will be revived, keeping the market buoyant and pushing the price of Brent crude up towards $46 a barrel. This pulled the Australian dollar up, with it also performing stronger against the US dollar, with another resistance point of 78.06 being broken for the first time in 10 months. Stronger commodity prices, in particular iron ore and copper, have also helped push the Australian dollar higher. Since turning the corner in mid-January this year, the Aussie dollar has appreciated by over 14% against the greenback. The last time we saw this level of movement upward in a similar time frame for the Aussie dollar was back in 2010 during the mining boom, when China's GDP was still running above 10% year on year. At these levels, the Aussie is still vulnerable to a dip lower, but given that the US economy is not tracking as well as hoped, it is unlikely we will see the Aussie US dollar back below 70 cents in the short term. A combination of a run of strong recent data numbers domestically, including solid employment figures and business confidence numbers, along with a reluctance of the RBA to indicate they'll be looking to act on rates due to the higher Aussie dollar, suggests the interest rates are likely to be on hold for now, with a likelihood of a cut later this year. Until next time, that's the market update from Bendigo Bank.